That over the course of 2015, markets have already gotten substantially more risk averse, meaning markets have already priced in a certain amount of concern and pessimism about certain macro factors around the world. We think principally the two concerns that have gotten priced into the market are, number one, fears of a significant slowdown in China, or what we might call a hard landing scenario in China, and number two, concerns that are related to the, we think, imminent Federal Reserve tightening cycle. And let me be very clear, at Nomura, we think that the Fed will be lifting rates next week. So 16th of December, Wednesday next week, liftoff finally happens. And after that, we think that the Fed will continue with two additional rate hikes in 2016 as well. So between now and the end of next year, we're looking at 75 basis points of Fed hiking. And that will no doubt carry some fairly important implications for risk management in Asian financial markets in particular. Markets in 2015 certainly have been very preoccupied with trying to anticipate the increase in U.S. interest rates. Now, the actual rate hiking hasn't begun yet, but markets have been occupied in pricing the hiking of rates. And we think that that preoccupation, that focus on the rate upside story in the U.S. is certainly going to remain a very front burner issue for markets next year. And so in that sense, even though the rates only begin at the end of this year, the dynamic of markets having to anticipate higher rates, that is in some sense a continuity from last year rather than a change in the view. And with that also comes, we think, an ongoing increase in the value of the U.S. dollar. So as we think about regional currencies, for example, we think that Asia overall is still going to experience about 4% currency downside in 2016. That's a region-wide average. The renminbi, we believe, will decline by about 5%. And the Malaysian ringgit, for those of you who may be specifically interested in the house view on Malaysia, we do believe that the ringgit is going to be declining by about another 4.5% relative to the dollar. So there is still some currency volatility around the region, although I would hasten to point out that Asian FX declined against the dollar so far this year on average by about 7.5%. So we expect that the volatility in currencies is actually going to be easing back a little bit compared to a very volatile 2015.